Shorting or selling a commodity option. How is it done? How do you open and close the trade? Coming up next. I'm Don Singletary. There are three things that are attractive about option trading. First, the leverage, being able to control large assets with a small amount of money, and the flexibility of being able to make money in any type of market. Bull, bear, neutral, makes no difference. And perhaps most importantly, risk selection, being in control of the amount of risk you choose to take on any individual trade. Now let's brush up on our options. Buying an option always gives us rights, whether it's a call or a put. When we buy a call, we're buying the right to purchase the underlying at the strike price. When we buy a put, we're gaining the right to sell the underlying at the strike price. Remember, buying options gives us rights. Now let's take a look at selling options that give us obligations. Selling a call, you have the obligation to sell the underlying at the strike price. If you sell a put, you have the obligation to buy the underlying at the strike price. And if you're new at this, don't worry, because you just need some practice using the terms. There are really only four things to remember. Two things are rights, two are obligations. When you buy options, you get rights. When you sell an option, you have obligations. Keep it simple. Remember, when you buy options, you get rights. When you sell options, you have obligations. Now we've studied the theory, let's make this thing real. I'm going to show you the anatomy of a real trade, a short call trade. The underlying is going to be the June 19 crude oil. You see how the symbol is derived there with the month code, the commodity code, and the year code. Normally we just call this the June 19 crude oil. Now you can see currently the crude oil is trading at $55.32 a barrel in the June contract. But back in October, a few months ago, it was getting to $75 and $80 a barrel. It's fallen drastically. Research indicates that over the next few months, crude oil is likely to trade in somewhere around a $48 to a $60 range. I'm using the June 19 options, and they'll expire on the 15th of May in 2019. That's about 104 days out from now. Quick review. The underlying in this trade, we're going to short a call on crude oil. The underlying is the June 19 crude oil futures contract. The date today and the date of this chart is February 1st, 2019. Our options expire in 104 days. We hold a market view that crude oil is likely to trade in a range around $48 to $60 a barrel over the life of the option, which is the 104 days from today. I'm using the Thinkorswim platform, calling up the June 19 class, the option matrix here. Call your attention to the 75 strike. That's the strike that, as a trader, I've chosen to sell because I think it's safe from being exercised. It's so far out of the money. As you see over here, the prob OTM, or probability the option will expire out of the money, is 96.85%. I like those odds. Also, you see the open interest of this option at 18,175 is plenty, so if I need to get in or out of the trade before the option expires, I'll have plenty of activity and be able to do that at an efficient price. The option is bid 15, ask 16 now, and I'm going to enter the order to sell it at 0.15. 0.15 is the equivalent of $150. The $150 is called premium, or the price of the option, and it's credited to my trading account immediately. So I've sold a June 19 75 strike out of the money crude oil option, and I got a credit of $150 immediately when I sold it. At any time during the trade, that means before the expiration date, I can buy the option back. It's called a closing purchase, and take whatever profit I may or may not have at that time. There are times in a trade where you have a profit and you'd like to go ahead and take it now rather than leave it at risk. You simply make a closing purchase. You buy back the option you had originally shorted or sold, and that closes it out in your account. Remember, the goal is not necessarily to hold the option until expiration. The goal is to make a profit whenever you can and however you can do it. And so very often you'll be buying back options you've shorted long before they expire. In this trade, I got a credit of about $150. The initial margin requirement was about $1,000, so my theoretical return on investment is about 15% in 104 days. This may not be a practical guideline because, as I said, most of the trades you close out sooner than waiting until expiration to do it. Your daily margin requirements are called mark to the market and can vary from day to day. And you should remember, this type of trading is not suitable for everyone and can be very risky. Even though the probability of success of this trade is around 96%, it still has a theoretically unlimited risk, and you should always follow your trades closely. Now I'm going to give you one piece of trading advice that most people will ignore. Anytime you get an email or a regular postal mail or any kind of message with somebody telling you that you would have made $300,000 last year with their system, it takes no risk at all, and they'll tell you exactly how to do it. All you have to do is send them a few $1,000s. Anytime you get that offer, there's a shyster at the other end of it. Don't believe it and don't do it. You get your wallet or your purse and you run the other way as fast as you can. I can't say the type of trading that you saw in this video is suitable for you. How could I? I don't know you. I don't want to manage your money. I don't sell a system. I don't sell software, and I'm not a broker. What I did do was work 25 years as a private consultant for commodity risk management hedge funds, which is a lot of words, but basically I have a lot of experience with commodity and commodity options especially. What I do, I'm a writer and an educator. I have a newsletter, which you can try for free, and you can see if this is the type of trading that you do. It clearly isn't for everyone. Only a few people that actually try it ever wind up doing it. And you need to be careful because it can be risky, but it's also a lot of fun, and it can have a lot of rewards. Please go to my website now at timefarming.com if you'd like to learn more about this type of trading. I'll give you free newsletters for 60 days. There's no debit or credit card required. You can cancel anytime you want, and there's no spam involved. This is Don Singletary, and thank you.